Good morning and welcome back to the Opportunistic Trader for Tuesday, August 21. Looking at straddle pricing, today is not an expiration. The straddle pricing is pretty low. It's actually only about $11 or $12 for 2 days, so they're not expecting much. So we'll keep an eye on that. And overall, that's what I see. The dollar's been an interesting trade. Do you have any thoughts on the dollar?
Yeah, well, I think whether it's we're looking at risk. We're looking at, to use the broad term, a little bit of risk on, and by increasing liquidity in the yuan, China has taken pressure off of them. They're kind of counteracting. They're saying, okay, if there's going to be tariffs, then we're going to just print more yuan, and basically that currency, they can't weaken the currency that much. And I'm bringing this back to the dollar because that's what your question is. I think, and this actually has to do with your comment about the Fed as well, I think this market will continue, the stock market will continue to do what it's doing, which is be irrational, and the world will continue to have problems because we are conducting an economic warfare of sorts, because we need to do it before the dollar loses its, I guess, global hegemony. And the way to do that is to export deflation. And so if they need us to buy stuff and we're not going to buy it, to speak broadly, that will ironically make our stock market go up because many reasons. But the reason that I think as a trader is most apparent is that people will put their money into dollars and as a flight to safety. The dollar, I think, is pretty linear in what we're looking at. People will put their money into dollars, not gold, when there's a problem in China.
The bond market remains a bit bid, but nothing crazy. And I mean, I don't know, they're saying record short positions. And, I always get leery on that because, people are utilizing options as a hedge and you don't know really how they're expressing their view. So right. I wouldn't utilize that data as gospel, but it'll be interesting to see the movement there and what happens from these levels at the low 280s. And we pointed out yesterday both on the chat and in Twitter that the yield curve just keeps flattening immensely, and we're looking at some point potentially for some inversions, and what that'll do to the equity market shall be interesting.
All right, flattening is recession, inversion is fighting inflation, traditionally, but who the heck knows anymore?
Yeah. So, that's what we're looking at from our perch here. So, Vince, thank you very much for joining us again this morning, and we will speak later.
Thank you. Have a good day, Larry. Have a good day, everyone.